As a business owner, you're probably used to thinking 5 steps ahead. Right now, you may be making a business plan for the new year, new campaigns you're gonna launch, new services you're gonna add, and how you can expand and improve your business over the next 12 months. But before you leap into this next year, if you don't take time to review last year's business expenses, you could be losing thousands of dollars. Do I have your attention yet? I'm Britt, and as a business owner, I know how expensive it is to run your own business. From paying for website hosting to advertising, investing in education, hiring freelancers, or even bringing on employees. And as a money coach, I also know how important it is to keep track of every penny. In this video, I'm gonna break down 6 business expenses that you should be writing off before the end of the year, as well as giving you some tips for keeping track of your business expenses to just make things easier. If this is a topic that interests you, definitely subscribe and hit the notification bell so you don't miss out on future videos. So why are write-offs important and how do they work? I'm gonna give you some specific examples of business expenses in a second. But first, if you aren't familiar with tax write-offs or how they work, I'm gonna try to explain. Basically, a tax write-off is a business expense that the IRS defines as necessary and ordinary. In other words, an expense that is essential and would normally be expected in order for you to run your business. I'll explain more in a moment, but basically, an office desk is a tax write-off and new bed sheets are not. Make sense? It's pretty self-explanatory. Business expenses are expenses that you use for your business and anything else is not. So when you add these business expenses in, it actually lowers your taxable income and therefore lowers the amount of tax that you need to pay for the year. Here's exactly how it works. Let's say you have $100,000 in business income and $50,000 in business expenses. You subtract $50,000 from $100,000 to get to $50,000 in taxable income. Because of how the tax brackets work, in 2022, you'd be paying 22% of any income over $41,776. So you would be paying 22% of just under $9,000, which is almost $2,000 in taxes. Now, let's say that you find an additional $3,000 worth of expenses, which lowers your taxable income from $50,000 to $47,000. In that case, instead of paying $2,000 in taxes for your highest bracket, you're paying just over $1,000. So in this scenario, finding $3,000 of additional business expenses saved you almost $1,000. The other way to think of it is that those $3,000 in expenses only cost you $2,000. In other words, you got a 33% discount on whatever you bought. This is one of the reasons business owners make a lot of purchases at the end of the year, to lower their taxable income, and because it's essentially like things are on sale. So now I'm going to talk about some specific expenses that you should be writing off to your business if you aren't already. And if you didn't make these expenses this year, but you want to, doing so before December 31st would be a great idea. Okay, so here are some common business expenses you should be writing off. 1, startup expenses. If you started your business in the last tax year, then you can write off up to $5,000 in startup costs. This includes costs associated with getting your business off the ground, such as training, travel, and marketing expenses. 2, this is a huge one, your home office. So if you work from home, you can deduct the cost of your home office. How does it work? Let's say you have a 2,000 square foot home and your office is 300 square feet of that. You divide that, you take 300 as a percentage of 2,000. That's 15%. So your home office is 15% of the total square footage of your house. In that case, you can deduct 15% of the cost of your mortgage interest or your rent, utilities like water, electricity, and gas bills, and homeowner's insurance. So let's say that those 3 things, your mortgage, your utilities, and your insurance, totaled $28,000 for the year. You would then be able to deduct 15% of $28,000 or $4,200 as a business expense. And if you don't have a home office, but you do rent an office outside of your house, that's also a business expense. So don't forget to deduct that. Okay, 3, business meals. This one's important and it's different this year. So most of the time you can only deduct 50% of qualifying food and drink purchases, but per IRS guidelines for 2021 and 2022, you can deduct the full cost of the meal. This is true for any meals that were billed or paid between December 31st, 2020, and January 1st, 2023. So don't forget about it. Keep in mind that when you are expensing a business meal, you need to be able to report the date and location of the meal, the business relationship of the person or people you dined with, and the total cost of the meal, including tax and tips. Hot tip, save your receipts and write notes to yourself on them, but we'll get to that in the next section. 4, new office supplies and furniture. Did you buy a new office chair with better back support, printer paper, a laptop? Those all qualify as tax deductions, so count them up and add them in. And if you've been dreaming about a new office chair, like I probably should, buy it before the end of the year and write it off. 5, prepaid expenses. So here's a catch. As long as you use the entire expense within the next 12 months, you can write it off in the current tax year. So say you prepay for your business insurance on December 31st, 2022, and it's insurance for the entire next year, January 1st, 2023 to December 31st, 2023. You can expense the entire amount of that insurance. 6, child and dependent care. According to TurboTax, the child and dependent care credit provides a tax break for many parents who are responsible for the cost of childcare. Though the credit is geared toward working parents or guardians, taxpayers who were full-time students or who were unemployed for part of the year may also qualify. Basically, if you paid a daycare center, babysitter, summer camp, or any other sort of childcare for a child under the age of 13, you can qualify for a tax credit. A tax credit is a little different than a tax deduction. A deduction reduces your income before taxes are calculated. A credit reduces the amount of tax you owe or increases your tax refund. Either way, it saves you money, and you should carefully note any childcare related expenses. I'll put a link in the description where you can learn more about that. All right, 7, important deduction, phone and internet expenses. If using your phone or internet is crucial to running your business, then those qualify as write-offs. Technically, if you use them for a mix of business and personal reasons, then you can only partially deduct those costs. 8, and finally, education and coaching. As a lifelong learner, this is my favorite write-off. Educational and coaching expenses include courses or classes related to your field of work, seminars and webinars, trade publication subscriptions, books related to your industry, business coaching sessions. Let's say you buy a course to help you learn how to write effective sales emails, or a coaching program that will help you grow your revenue, or a program that will give you effective systems for managing your money, like the $1 Million a Year. All of those are tax write-offs, so buy them, apply them to your taxes before the end of the year. Now, let's talk more about the $1 Million a Year, because if you have not purchased this program and expensed it to your business, it's a game changer. So the $1 Million a Year is our signature program to help you learn how to painlessly manage money and build wealth. We have a section in our training vault where we actually help entrepreneurs master business finances. You know, how to separate your personal finances from your business expenses and make it really easy to track and manage everything. We teach our entrepreneurs, or anyone, freelancers, people with a fluctuating income, how to pay yourself a steady salary. We teach you how to manage your business finances and grow your revenue. I'll leave a link in the description if you want to learn more. And again, it counts as a business write-off, so do it before the end of the year. Okay, I'm gonna get into ways to actually manage these things, because it can feel daunting to have all these expenses but not know where you're tracking them. So 3 ways to track your business expenses. But first, if you found this video helpful so far, please give it a thumbs up. It's an easy way to support us so we can continue to make free content for you. And if you want more videos on business finances or managing money as an entrepreneur, leave a comment below. We want to make content on topics that you are curious about. Okay, getting into the specific tips on how to track business expenses instead of, scrambling to find your receipts at the end of the year. First tip, get a business bank account and a business credit card. It's important to keep your business and personal finances separate, and having separate accounts for these makes tax prep so much easier, since you'll basically just be tracking your income and expenses from a single account and not have to figure out what was personal and what was business. We also did a video on this, so if you want to learn exactly how to set up a business account and pay yourself from it, we did a video on how to pay yourself as a business owner, and I'll put a link in the description. Okay, second tip, digitize your receipts. If you're ever audited, the IRS will want to see your receipts, and shoving a bunch of them into a junk drawer where they'll get jumbled up and the ink will fade only makes for a nightmare later. So digitally scan and save your receipts makes a much cleaner, more efficient system. And there are tons of apps that make this really easy to snap a photo and add it to your records. 3, keep a spreadsheet handy. As you've seen, there are a lot of different business expenses, and this video just scratches the surface of possible expenses. I like to keep a spreadsheet where I list and categorize my expenses as they come up during the year. I always think I'm gonna remember things, but having the spreadsheet to reference at the end of the year when it comes to tax season makes it so much easier. So highly recommend just starting a spreadsheet and adding to it as the expenses come up. All right, I hope you got the message that if you aren't claiming business expenses on your tax return, you are potentially leaving thousands of dollars on the table. So take advantage of these tips and use them to make the best financial decisions for yourself and your business. And finally, if you want to learn our systems for managing money as an entrepreneur, living debt-free, saving for retirement, and building wealth, check out the $1 Million Year. In it, we give you spreadsheets, step-by-step video guides, and coaching support along the way so that managing your personal and business expenses feels easy. I'll leave a link in the description below so you can check it out. Thanks, as always, for watching.